Perhaps now more than ever, given the rising living costs, inflation, uncertainties, and unusual times, the conversation surrounding proper financial management has increased. This calls for a need to recognize the importance of financial literacy. This equips us with knowledge and skills in managing our money or assets effectively. Understanding our finances seeps into every area of our life. We must protect ourselves from economic turmoil and uncertainty. With increased financial capability, we can transition from surviving to thriving and be able to support our ever-changing lives.
So what is social return of investment? Social return of investment, developed from social accounting and cost-benefit analysis, is a framework that allows organizations to measure, understand, and manage the outcomes of its activities. It does so by placing monetary value on the different outcomes to assess the varying costs and benefits. The different outcomes range from social to economic to environmental. Further, the framework is based greatly on involving stakeholders in determining which outcomes are relevant. There are two types of SROI, namely Evaluative SROI, which is based on past outcomes, and Forecast SROI, which focuses on predicting the amount of social value that may be created. Forecast SROI plays an important role in the planning process of certain projects and activities. When it comes to the value of SROI, by providing an in-depth understanding on the positive changes and negative outcomes brought about by its different activities, SROI allows organizations to better assess past decisions, monitor current ones, and aids in future decision-making processes. This allows organizations to have a clear picture of the state of their activities and the value it brings, which betters communication and possibly attraction when it comes to new clients and sources of funds. Essentially, social return of investment, by focusing not only on the financial impact, but the social, economic, and environmental as well, with the help of qualitative and quantitative data, presents a story of change that allows organizations to constantly improve itself as a whole and better work with key stakeholders.
Today, we will be evaluating the social return on investment of SEDPI's financial literacy training. Social Enterprise Development Partnerships Incorporated, or SEDPI, is the Philippines' premier capacity builder in the fields of microfinance, social entrepreneurship, and financial literacy. There are 4 organizations within SEDPI. 3 of the organizations are for-profit and 1 is non-profit. The 3 for-profit organizations are Social Enterprise Development Partnerships, SEDPI Development Finance, and SEDPI Social Enterprise Ventures. The sole non-profit organization is SEDPI Foundation. SEDPI strives to create sustainable social enterprise of the economic empowerment of the poor. Through it provides capacity building services and financing services. Capacity building services include training, research and consulting, while financing services include loans, equity investments, and social responsible investments.
The primary stakeholders of these financial literacy trainings are nano, micro, and small enterprises, overseas Filipino workers, and private and public employees who either have problems handling their finances, want to learn more about being financially literate, or are the main income providers of their family. With this, SEDPI's employees and board of directors continuously aim to support these main stakeholders through different means such as videos, classroom sessions, and many more. Their main goal is to guide Filipinos in their journey of becoming more financially literate, financially empowered, and ensure that their projects reap long-term benefits for their main stakeholders by measuring the SROI through self-declaration surveys. To make these possible, SEDPI will need the help of other stakeholders, namely fellow social enterprises, SDFI, NGOs, the academia, and the government or public sector as well. Fellow social enterprises will serve as inspirations or even business partners who can share best practices with one another to help each other grow and provide for the sector they both serve. On the other hand, SDFI, or the SEDPI Development Finance Incorporated, will serve as the program's financing arm, which offers the primary stakeholders opportunities to invest in institutions in the country by providing them access to capital. Non-government and community-based organizations can support by providing financial aid and assistance in ensuring that knowledge and capacity transfer occurs at a community level. Subsequently, academic institutions such as the Ateneo School of Government also provide aid by sharing resources, providing help in data collection, or even creating learning opportunities for the primary stakeholders. Lastly, the government or public sector also helps SEDP's programs by assisting SEDP in reaching out to communities in need, guiding the program implementations, enhancing social welfare programs, and bridging social capital. But how does SEDP conduct its financial literacy training anyway? To better understand the process of conducting these trainings and the impact of these create towards the stakeholders, we will be discussing the outcomes map of the financial literacy training. Before anything else, SEDP will have to focus on hiring employees to assist in establishing the online presence, as well as continuously creating content for their Usapang Pera series. They will also have to design and develop online modules and materials to be used in these trainings. Once done, SEDP's activities will serve as avenues for financial literacy training. This will include conducting classroom sessions, offering online modules, hosting and posting Usapang Pera live streams on Facebook, and even publishing books and comics all about financial literacy. In these slides, you'll be able to see the different avenues of training that SEDP offers, such as their book, their YouTube channel, the classroom sessions with OFWs, live streaming videos, episodes on handling finances, and even live sessions with special guests such as Lauren Legarda. The implementation of these projects aim to help SEDP's main stakeholders receive more financial literacy training, both in the online and on-site setting, through the synchronous live streamings, the Usapang Pera videos, and the traditional classroom sessions as well. Once achieved, SEDP aims to improve the financial literacy and responsibility levels of these main stakeholders through increased savings, investments, and lower debts accumulated. Furthermore, they also aim to give benefits by offering them access to capital and insurance coverages. Overall, with everything that SEDP's financial literacy training has to offer, their main goal is to impact the lives of their stakeholders by helping them improve their economic security, increase the number of socially aware investors, and make them become financially empowered individuals.
Now that we have detailed how SEDPI conducts their financial literacy training, we move on to actually evaluating the impact of the program that it has on its stakeholders. We are going to look at the relationship between the inputs, outputs, and the outcomes of the program in order to illustrate the story of how SEDPI's financial literacy training makes a difference on its primary stakeholders' lives. First, we were able to identify the initial financial investment or input of each stakeholder necessary to conduct the financial literacy training. For the primary stakeholders, their input is in the form of time spent attending the financial literacy training. This means that SEDPI shoulders a majority of the financial costs in order to make the financial literacy training free of charge to its primary stakeholders. This involves program costs and administrative expenses that amount to $1,476,853 pesos, in addition to the training revenue shouldered by government and corporate clients that amounts to 211,856 pesos. Thus, the overall financial investment that goes into SEDPI's financial literacy training program is a total of 1,688,709 pesos. Next, we were able to clarify the outputs of SEDPI's financial literacy training program, which involves the training, mentoring, and coaching of the primary stakeholders via SEDPI's webinars or live streaming. Once we identified the inputs and outputs of SEDPI's financial literacy training, our team was able to collect data on the outcomes of the program experienced by the primary stakeholders based on the 39 primary stakeholders who answered a survey detailing their financial behaviors before and after attending SEDPI's financial literacy training programs. The first outcome would be an increase in savings experienced by the respondents. And based on the survey, NMSCs experienced an average increase of 218,571 pesos in their savings after attending SEDPI's financial literacy training. while private and public employees experienced an average increase of 157,545 pesos, and OFWs experienced an average increase of 265,846 pesos. The next outcome would be a decrease in debt burden experienced by the primary stakeholders. And based on the survey, NMSCs experienced an average decrease of 16,250 pesos in debt after attending SEDPI's financial literacy training, while private and public employees experienced an average decrease of 17,500 pesos, and OFWs experienced an average decrease of 74,330 pesos. The next outcome would be an increase in insurance coverage. And based on the survey, NMSCs experienced an average increase of 588,666 pesos in their insurance coverage after attending SEDPI's financial literacy training, while private and public employees experienced an average increase of 40,100 pesos, and OFWs experienced an average increase of 265,846 pesos. The last outcome would be an increase in the primary stakeholders' investments. Based on the responses from the survey, NMSCs experienced an average increase of 392,625 pesos in their financial investments after attending SEDPI's financial literacy training, while private and public employees experienced an average increase of 193,333 pesos, and OFWs experienced an increase of 1,732,154 pesos. In order to verify that the outcomes we have analyzed are truly a result of SEDPI's financial literacy training, we made use of various measures of deadweight, attribution, and drop-off. In the table being presented, the deadweight percentages refer to the portion of the outcomes that would have happened even if the primary stakeholders did not undergo any of SEDPI's financial literacy training. We calculated this by looking at the current savings, debt, insurance coverage, and investments that the stakeholders have now, and getting the average percentage of how much of savings, debt, insurance coverage, and investments that the stakeholders already had before attending any of SEDPI's financial literacy training. For the attribution rates, this refers to how much of the outcomes can be attributed to other sources of financial literacy training. In order to get these percentages, our team compared the average amount of additional resources that the respondents used to access financial literacy information, such as through YouTube, Facebook, blogs, books, and friends and family, and compared the respondents' self-rated usefulness of these resources to the self-rated usefulness of SEDPI's financial literacy training program. For the drop-off rate, this refers to the decrease in value of the outcomes on a yearly basis of 5 years. After factoring in these various measures, we were able to calculate the total impact of the financial literacy training program, which amounted to 22,540,288.54 pesos. Now that we have established the financial impact of the program based on its outcomes, we can now calculate the social return on investment of SEDPI's financial literacy program, which will allow us to compare the financial value of the investments with the financial value of the social costs and benefits achieved by the program. First, we were able to project the future value of all the outcomes achieved based on our projected drop-off rate of 25%. From there, we were able to calculate for the present value of all the outcomes of the program per year. In year 1, the value of the outcomes is about 22 million. In year 2, it is around 16 million. In year 3, it is around 12 million. In year 4, it is around 9 million. And finally, in year 5, the value is around 7 million pesos. Once we added the present value of the outcomes per year, we were able to calculate the total present value of the financial literacy program, which amounted to 41 million pesos. By subtracting the initial financial investment of the program, this gives us the net present value of the financial literacy program, which amounted to 39,886,402.40 million. 40 pesos. 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 39,886 Thus, the social return on investment of SEDPI's financial literacy training is 24.62 pesos per every 1 peso spent of the initial financial investment of the program.
SEDPI's online financial literacy programs have made it more accessible to more people, and they continue to produce materials and content to reach their ultimate goal. As previously presented, SEDPI's financial literacy training has positively impacted the respondents we surveyed. Results showed how such programs have helped them increase their savings, decrease debt burdens, grow their investments, and have more access to insurance. SEDPI is a capacity builder that valuably educates the people. They promote socially responsible investments that aim not only for high profitability or returns but also for development. Their vision is to be a sustainable cluster of social enterprises that offer investments that create a more positive social impact, striving to uplift the life quality of the poor, shield the environment, and empower the marginalized. Ultimately, SEDPI aims to contribute to the financial empowerment of NMSEs, public and private employees, and OFWs. Dahil ang pagyaman, napag-aaralan at napagtutulungan.